Hello everybody and welcome to Intermediate Accounting 2 Unit 1. We are going to talk about types of business structures this week. Different types of business structures are sole proprietor, partnership, corporations, C corporation, S corporation, and limited liability corporation. We'll go through each of those and tell a little bit of the characteristics of each one of those. Sole proprietor. This is the most common type of business structure. It's the least expensive to form. It is the simplest in terms of legalities. And the owner is responsible for all taxes. The owner is also responsible for all liabilities, including debt and any legal claims. Partnership. There should be a written agreement. Should have a limited life, or it will have a limited life. It's a mutual agency. There is unlimited liability to the partners. They have co-ownership of the property. There is no partnership income tax. Each partner files income tax on their portion of the profits or losses on their individual income tax. There is no income tax on the business itself. Corporations. These are independent from the owners. The liability lies with the business. This frees owners from their personal assets from all risk. They are not liable for the any debts of the business. It frees up their personal money and their personal assets from any business risk. Majority of large businesses are classified as corporations. And C corporations. What are C corporations? C corporations are subject to double taxation, once at the corporate level and again at the shareholder level, but only when profits are distributed as dividends or when the company is liquidated and shareholders receive portions of the liquidation. These are publicly traded corporations, must be structured and filed as C corporations. So all publicly traded corporations must be structured and filed as C corporations. C corporations are separate legal entities. Now we'll talk about S corporations. They are similar to C corporations. However, they avoid the double taxation. The caveat is they must be domestic. They can include individuals, certain trusts and estates, no partnerships, and they can have no more than 100 shareholders. C corporations can have unlimited numbers of shareholders. So an S corp is different from a C corp in that regard. Limited Liability Corporation, LLC. This is a pass-through entity. The tax responsibility is passed to the members of the LLC. There is no limit on the number of members. Members are not liable for the debts of the corporation. They are protected from the debts of the corporation. These are the references that I used when researching this topic this week. I hope you enjoyed this short, brief lecture on types of businesses. If you have any questions or comments this week on types of businesses, you can give me a call, email me, text. We are studying partnerships and corporations, but I thought you might want to see a little bit further detail of some other types of formations of business structures, so I went a little bit deeper. If you have any questions about stocks and issuing of stocks, just give me a call on your exercises, and I look forward to the upcoming class with you guys. I will see you next week. Bye.